The time has come for the last panel of the day, and it sort of carries on, a continuation. It'll be about dynamic tariffs or flexibility markets. What will drive the next wave of customer engagement? And for this final panel of the day, we welcome to the stage Barbara Wittenberg, Chief Technology Officer at 1,5 Degrees. Jan-Willem Rombouts, welcome back to the stage, founder and CEO of Beebop. Alex Schoch, Global Director of Flexibility and Electrification at Octopus Energy Group. And to moderate this session, we welcome Oscar Cantalejo, Head of Perseo at Iberdrola. Over to you, Oscar.
Thank you.
Thank you very much.
Thank you, everyone, for being here, being so brave for attending the last session. So we are going to discuss a bit about tariffs, flexibility. So let's see if we can go deeper in some points that have been mentioned before. With us, we have a very good panelist. So I will let you do a brief intro about yourself. Barbara, we're going to start with you. Briefly explanation about you and the company.
I'm CTO at 1,5. 1,5 is a company that brings home electrification to households. So basically we install heat pumps, PV panels, batteries, EV chargers, but then also connect all of those together in one optimization, so across all the different domains, optimize their energy usage for self-consumption, but also towards the energy grid. And the company that's behind the later part is Heartbeat AI GmbH. I'm also managing director of that. And beyond providing Heartbeat solutions to 1,5 customers, we recently also started to offer that as a self-service installation for customers to purchase Heartbeat with us online.
Okay, thank you. Alex, please.
Hi, I'm Alex Schoch. I lead electrification and flexibility at the Octopus Energy Group. Very simply, we use technology to accelerate the electrotech revolution, make it cheaper and more affordable for everyone.
Okay, thanks. Jan-Willem?
Yes, Jan-Willem Rombouts, CEO and founder of Beebop. We provide the infrastructure to energy suppliers to access their customers' flexibility and to deploy that across the power system. And for OEMs, the infrastructure to give access to rebate programs and virtual power programs in their region. That's what we do.
Okay. So the core of the discussion, I think, is about, and you mentioned, Barbara, optimization. But optimization has many angles. So we can optimize for end user, for system, for DSO, for different agents. So what evolutions do you expect is going to be more important for growing these flexibility markets, or have these new solutions growing for the energy sector?
I mean, in general, we are already at a place, and I think everybody in the industry is aware, where we can optimize for dynamic tariffs. So unless if you look at Germany and you need to install a smart meter, other than that, all of those customers that you can connect their assets, you can optimize them, and you can optimize them for dynamic tariffs. And the base of the whole discussion also, whether it's dynamic tariffs or flexibility, is where does the customer see value in, right? So anything that comes in addition to that regarding the evolution of where do the markets go, we need to make sure that the customer sees the additional value in what we are doing. We can easily optimize a customer for grid reasons if there are dynamic fees for the grid, right? Then the customer sees the value of why at a certain point in time we charge or discharge something from the assets. So I'm a strong believer of there needs to be a signal for the customers that is economic, that shows the customer that a system does the right thing for the customer.
Okay. Alex, maybe you, as your experience, you are in many countries as Octopus, maybe difference between countries, but at the end of the day, trying to do similar proposition everywhere, and maybe with a similar, but with some differences perspective, in the sense that you are also going to flexibility markets, etc. What is your view on that?
I mean, I think fundamentally we are just at the beginning of this, and I think about this on a couple levels. On the one hand, from a kind of energy system perspective, we have the first time that we actually have electricity load growth in decades. And that's all coming at low voltage at household and at business levels. On the flip side, we're building more and more renewables that have a really cheap, low-cost LCOE. So the fundamental premise of where value sits in the energy market is moving from where it's been for 100 years of extracting and refining fuels to generate electrons, and it's moving to how those electrons are consumed and how power systems are balanced. In that context, like, there's only 2 million EVs on UK roads for a passenger fleet of 35 million. There's just under 2.5 in Germany for passenger fleet of, I think, north of 50 million. So, there's 4 million residential solar systems in Germany, I think, of, 40 million households. So, it's still really, really early. And so I think one of the things that I find amusing, frankly, is this obsession about what is the customer proposition, where's the direction of travel. It's like, in 1998, we went to a T-Mobile store or D2 or whoever, and we actually had to sit down and have someone explain to us what the line rental was, what mobile phone contract was, minutes, what SMS was, what my WAP allowance was. We are just at the beginning, and I think we have so many different segments of customers who are at different stages of their electrification journey that we need to think more about, how does this pass the grandmother test? How can you really simply communicate value with certainty? Because I think one of the things, whenever I see dynamic tariffs, especially across Europe, there's this fascination with dynamic tariff means some sort of wholesale market indexed price that changes dynamically. That's cool. But, show of hands, who here is on a tracker mortgage versus a fixed interest rate mortgage? Yeah. And that, I think, is quite telling.
Yeah. Okay. And I think it's true. So it's really important that we are at the early stage. Electrification is increasing a lot, and there is also a lot of layers or agents. It's not the end user and the utility. There is a lot of companies or technologies, and John, you are part of this stack, mainly joining this new electrification or electrified assets that are coming. How do you feel these models can affect your business?
So maybe to just add another view to the tools that have been described here, just from the power system perspective. So we all know that there is need for flexibility. Okay, good. Years ago, that was a capacity market somewhere, or that was a frequency response market. So the very earliest sort of markets that were developed around flexibility. If you now look at the use cases and you start stacking up from grid services, all the different varieties and kinds, to wholesale markets, where it's not just day ahead, but imbalance management, continuous intraday trading, and then you have now the hyperscaler cash flow that is suddenly coming in the system. The point is, the ecosystem of buyers for flexibility has complexified a lot, and it's at various levels of the power system, right? So, look at the Netherlands, congestion markets, and in the UK, obviously, a lot of work has been done more at the local level for that flexibility. And so, my viewpoint is, in the end, don't pull the customer in all of that complexity, because you're going to lose that customer very quickly. And so that's a bit the grandmother test that you're talking about. But at the same time, and I think that's a very important and good point, we're right now sort of in an early mover market. And actually, those customers, a lot of time, they want to understand what's going on. Unfortunately, because you see that a lot sort of in rollout of programs, you have these people who are sort of doing a PhD on complex optimization, it seems, and then you get customer support issues, etc. But so we're going to ride this evolution. I think that is right. I think the end state for me would be dynamic tariffs no, that's not the end state. It's a very simple rebate, a very simple overall discount that you give to the customer. And why is that? So we sell our platform to suppliers, some of the large suppliers across Europe. And I think that the business model that they have of trading, they will continue to do. That's a core expertise, and they will start trading over all of those markets. And then you have a pricing team that more and more is seeing how much of my flexibility can I hedge, what kind of long-term pricing can I put on that. And then essentially you get, again, what's already working today in fixed tariffs. There's also imbalance management that is paid for by the customer. People don't know it, but the traders are doing a lot of long-term, short-term optimizations that nobody knows anything about here. You just pay kilowatt-hour price. And so I think that is the end state. How do we get there? That's a separate question, but that's my view.
Okay. Yeah, you have mentioned, and I think it's an interesting point, more than tariffs, that, tariffs can help, but it's important how to orchestrate, because there is a lot of agents, and it's not easy. I mean, sometimes they are competing for the same flexibility or have an opposite interest on that. So how do you see this? I mean, because I think this is not only focused on customers. That is true that maybe they want something simple. I don't know, Barbara, maybe you can give us some feedback on that, but I suppose the customer is looking for, okay, I want to have my life as easy as possible, so please don't tell me I have to change my behavior and don't switch on the TV wherever. However, we have people doing trading with this flexibility. We have penalties in some countries because you have deviation, so you can use this flexibility to avoid penalties. We have a lot of things that you can do with flexibility. How do you approach to that issue? Do you think it's you are offering flexibility to different actors, or?
So I think that's an excellent point and a very underestimated point. And so what we see with some of the suppliers that go in quickly in these flexibility markets, for instance, using dynamic tariffs, and not doing that careful orchestration, that you get into trouble. And so in the end, what you need to do is you need to look at that asset that is sitting behind the meter, and you have a certain grid tariff there. It could be dynamic energy tariff, could be dynamic grid tariff. You have a whole bunch of economics of that asset itself, so cycle budget of a battery, etc. And then you enter front of the meter. And so whatever you do front of the meter, you need to make sure that you are not hurting the self-consumption case of a customer by doing imbalance management, right? And so that requires a careful arbitrage, and that is quite complex, especially if you start looking at 24-hour time scales where you need certain predictability of solar load, etc. But so trading all of those points in the value stack off against each other, and making sure that in the end what the customer sees on their bill is something understandable.
Okay.
Again, what you can do is you can give a rebate because you're trading the flexibility on wholesale markets, but what if the grid tariff increases? Then you get unhappy customers. That is critical. So thinking that through all the way from a trading arbitrage perspective, but then making that somehow very simple to the end customer. That's the end game.
Okay.
Yeah, and maybe to add to that, I think if we look at different markets, we can already see different stages of that. And I stick with my dynamic tariffs. But if you look at Australia, for example, they went all the way from very flexible pricing, even more granular that we have in Europe, to people steering assets of customers and giving them rebates. And then customers started to drop out, because when we had it in the panel before, they exactly had that feeling of somebody steering my asset, but it's actually my asset that I bought. So I want to see the value of that and not have a margin or a certain payback, and somebody else is gathering the value from my asset. And then if we look into the European countries, I fully agree with that. I'm looking at a certain set of customers that when I say dynamic tariffs make a lot of sense, because I'm looking at a set of customers that has steerable assets, first of all, and then second, that is kind of involved into the story because those steerable assets mean something to them with regards to energy transition and stuff. And those customers want to have visibility, from my point of view, in Europe also, why we are steering their assets. And the easiest way to transport that is some kind of a dynamic tariff. Whether it needs to exactly follow the curve and shape that we today do when we say dynamic tariffs and talk about the day-ahead prices mainly, it doesn't. But it needs to show to the customer that at a certain point during the day, the flexibility of the assets or the consumption or the feed-in has a certain value to the energy system. And the new complexity, from my point of view, comes in bringing not only all those different decisions together in the optimization model, but also in what we tell the customer is actually the price for consumption or for feed-in that the customer will receive as a reimbursement kind of for the assets being optimized. And then I think the second thing is I'm looking at a customer set which doesn't recognize so much in daily life that we steer something. So I'm not looking at the customer set that is turning off TV because the dynamic tariff says it's expensive. I'm looking at the customer set that sees the battery has been pre-charged from the grid during nighttime because there was cheap electricity, and then they power their assets in the morning from that battery. And that makes sense to show them the value by some kind of a price that follows a shape, if we don't want to call it dynamic tariff, because we assume it's linked to EX.
Alex?
I think that's an interesting point. One of the things that, so we have about 12 million customers that we serve in our markets. About 10% of those are on a smart tariff, so about 1.2 million customers, and on a range of different smart tariffs. And Barbara's absolutely right. For those that, the customers you want to go after are the Holy Trinity customers. They have an EV, they have solar and a battery, and they have a heat pump. Or if you're in a different geography, they have a smart thermostat for air conditioning. But there's also a subset who only have one of those, or who don't yet but want to be engaged. And there I think about, we're talking about how to drive the next wave of customer engagement. For this to really break through into it being the vast majority of customers, there's a big educational piece. And I'm personally a big believer in what I call campaigns. So enabling customers to participate in some form of activity, whether it's increasing their use or decreasing their use of electricity in a defined period of time. They can do that manually by, not baking then or not running the dishwasher, or they can do the opposite. We pioneered this with the national system operator in the UK at the peak of the Ukraine energy gas crisis. This has continued to scale. And this is a great way of educating people that energy costs different amounts at different times in the day, and that even when it is really sunny, you actually could get paid to use more electricity. That's a huge thing in terms of just dispelling the thing of, well, I pay for this commodity, I pay a kilowatt price, I have no idea what happens. So there's a big education piece. And then, of course, there's all of the early adopters, or it's not even early adopters, right? Because actually, as you electrify your life, you just become more and more obsessed about what's the price per kilowatt hour that you're paying, and are you getting the best deal? So actually, I think there's a bit of a fallacy in thinking that there's a short-term early adopter super geek. I think, if anything, that's where consumers are moving to. The key question is trust in whoever's doing that for them, and simplicity from a customer perspective.
But I think it's interesting. I think the customer in general, even if he's quite advanced and has electrified heat and an EV, etc., he's only thinking about optimize the bill. I mean, I don't want to pay more than necessary. I want to reduce my bill. But this is something that can have some value that he is not thinking about. And it's not a problem. I mean, you are reducing the bill, and then you are getting some revenue for also helping him to do that. So what is the feeling, John, you have with this? Do you think customers, when you install and connect their assets, think about savings, or it's more about I want to get some revenue for the value that I'm giving to these guys in?
So first of all, and that's the complexity with some of these discussions, that it depends on where you are. So you were talking about Australia.
Yeah.
In America, I would say that people want cash in their account, rebates.
Okay.
I think a lot of the DR programs were developed around rebate programs. Maybe in Germany or in some European countries, they would like a discount. And so there are some customer sort of cultural differences, there are segment differences. I think when people buy a solar panel, I think that product in the end is about bill savings. People think about how can I save money here on what I'm paying already. I think people are naturally educated. We've seen a few crises over the past few years, and those are very good moments to educate entire populations that, yeah, there's this cost component in my household budget that, what is that? Electricity? Whoa, that suddenly, then of course as you electrify, suddenly that becomes material, and that's a huge shift, that's a material cost piece. But I think people structurally think of energy as a cost, and hence cost saving is a natural instinct, at least in the European context.
Yeah, it's not only about, it's not only about the crisis, or what we have learned is that now I have an EV and my bill is double. Now I have a heat pump and then my bill is higher. So it's a kind of, now I need to think about how to reduce the cost of electricity for me. So it's, Alex, how do you feel about that? I mean, because you are also an utility, so you have, let's say, two hats. One is, of course, best for my customers. I want to optimize the bill because I want to be cheaper. I'm competing with others. But on the other way, I'm also an utility. I have access to markets, etc., so I can use flexibility for other things. How is the balance? How do you manage this?
So I think philosophically we think about it very simply, which is based on the kind of load that I need to serve and the shape that I need to serve and the type of customer, what's the best possible value that I can give that customer? That includes, do I control one of their large assets or not? Can I shape their demand? And then, at the end of the day, I then backtrack into that and I look at, what are the incremental revenue pools that I can tap into? What are the cost optimizations I can achieve? I think about it really in those buckets. Like, how can I decrease my kind of non-energy costs, my non-commodity costs? How can I optimize my commodity costs? And what are my net new revenue pools that I can tap into? Then it is a simple question of, what do I share with the customer? So how do I make the customer proposition as valuable as possible? And that's the ongoing exercise. As Jan-Willem said, it's like there's a series of time frames in which those decisions get made, right? They're priced on an annual basis, a seasonal basis, kind of looking at different. It's the revenue stack for a smart customer is very similar to the revenue stack of a trader trading a front-of-the-meter battery. It's very different. It can be wildly different seasonally. It's different day by day in terms of where that comes from. But if you're going to get customer buy-in, the value proposition for the customer has to be very, very strong. And sorry, last point is, I personally believe, or we generally believe, the risk has to sit on the market participant, not on the customer. If you try to push that down to the customer, you will have definitely some customers who are willing to wear that risk, but the vast majority of customers won't.
Yeah, I agree. So it's 4 minutes about for finishing. Any question from the audience? More than happy to answer. We have someone there.
Hi. So Adam from Estonia. In Estonia, I think about half of all household customers are on a dynamic tariff for like this 15-minute tariff.
Mm-hmm.
So it used to be 60-minute tariff, and now the granularity increased. And as someone involved in electricity trading, it seems to me that, like from the economic perspective, the only correct way forward is to expose as many customers as possible to the dynamic tariff, so that they would make their consumption decisions based on the true price of electricity. So maybe anybody want to comment my view?
I would have one question. In my understanding, in the Estonian Baltics markets more generally, you have a lot of imbalance risk. So the imbalance costs are quite high, and those signals, sort of real-time signals, are very high. And that's a challenge to utilities. I mean, that's real cost going out. And so if you're sitting with huge amounts of volume of solar, other distributed assets with your customers, don't you also want to use that flexibility of that install base from your customers to manage imbalances? And then the question is, how are you going to combine that with dynamic tariffs? So that's not to say that that's incompatible in any way, but it's just you're going to face still the question, how do I now expose this? Do you add it as a signal? And maybe that's interesting for you, Barbara, how you would look at that. So it just solves one problem of the whole, unless you're going to couple that dynamic price to a lot of other price signals, and then you come to the start of the conversation. So,
yeah. So from my point of view, I would really take the customer shoes and say it should be integrated in the signal that the customer sees as a pricing, because only then, for the customer, the world is too complex. We can't explain the local grid problems and large transmission grid problems, imbalance problems, all of those things. The customer can't be bothered, right? But the customer can understand that at a certain point in time, it's either good to use more or less, or to store more, or to feed back into the grid. And for me, that is really the solution to that, is bring that into a price curve, even if it's complex, even if we need to abstract a little bit, but bring that into a price curve to the customer in some form of shape, so that the customer can see what it means to use electricity at a certain point in time, or to shift something. And then again, as a second point, I still believe we should do as much of that shifting for the customer as possible. Because then again, if we look into Sweden or other countries where people were watching the news and saw it's expensive or not, and then decided when to wash the next day, I think that's also looking forward, and with the fast changes that we will see in those prices, or that we see in those prices, that's too much for customers. So then again, I think we should automate as much as possible, with also using batteries as storage systems in homes that maybe don't have PV, for customers, so that they can see the impact based on a price, but the optimization decision is taken away from them, so that they don't need to think about what the price will be at a certain point in time in future.
Yeah. Any other question from the audience? Okay, I think last comment, just a question, and I think it's quite difficult, but in one sentence, how do you think this will be in 10 years? You mentioned about we are in the early stage, how it will be in 10 years. Everything will be automatized, the customer will be the centric. How do you think about this in 10 years?
I think in 10 years, a lot more of that will be optimized, first of all. But then I also believe in a lot will more handled already locally. Because if you solve the problems or the deviations already locally before you start bringing them to a larger share of the grid, a lot of those issues of imbalance and stuff can already be solved. So I think we need to think in smaller brackets of customers, regions and stuff, and then try to balance those amongst each others, and start obviously automating also the grid side a lot more.
Okay.
I think it's 100% dependent on how clear the price signals are that are available at every level of the system. we talk a lot about price signals, but as Barbara was saying, there's basically no price signals where it matters, which is at low voltage. All we talk about is national price signals. So if we get dynamic price signals from network operators, coupled with dynamic prices from wholesale markets, the settlement periods will get smaller and smaller, then I think we will see an explosion in automation. Okay. Because also, let's be honest, we're humans, we're terrible at predicting the future. But if these things become true, then a lot of barriers get broken down and the business cases become even more self-evident.
Okay.
Yeah, I think there's a possibility of a future, just a possibility. I don't know either. Where it's really increasingly commoditized also again, the flexibility markets, and where customers, they have a set of assets, and essentially they can look at a marketplace of suppliers/traders. They're going to be much more like traders than suppliers, who can give them the best value for that. And I do think, again, that super simple customer propositions will win there. But so marketplaces, where there's a marketplace of suppliers upstream, trader suppliers, and as suppliers look downstream, they see essentially a marketplace of OEMs and customers. I think that's a possibility of the future that I would bet on.
Okay. Thank you. I thought you were going to mention the AI for controlling everything in 10 years, so thank you for not doing it. Thank you everyone for attending this panel. Pleasure to hear with you. Thank you all.